Hey, good afternoon, everyone. This is Sam, and I'll be doing the free nightly video for October 30th, 2020. So this nightly video, I'd like to just show you two things, maybe three, but definitely two things here. We're going to look at the VIX, and we're going to look at the SPY, and then the third thing, kind of interrelated, is the difference between intraday overbought oversold and daily plus or larger than the daily overbought oversold. So let's dive in. So the first thing I would like to talk to you about is the VIX here. So the VIX is actually setting up rather large. This pattern that's set up here, this base that has developed on VIX is actually significantly higher than the base that took it much higher back in February. So after February through March, we had the big crash and VIX spiked up to 85. And then we pulled back, and we've been pulling back ever since. But we pulled back and made this big range down here that's actually basing at a higher level than where it based before. The thing is, now that it's based here and actually kind of reset its momentum, you can see really clearly that it's pretty aligned here, meaning that it's gotten above its 8, 21, 50. The squeeze, which is indicating pressure relief to the upside, is still very, very early. It hasn't even fired yet. You don't even have a histogram printing higher. The range stochastic should be crossing positively from the floor, and you can see that it is. The trend oscillator, if this is going to become real trend, should be crossing at the center line here. So the red holds the center, the yellow then crosses the red, and that's exactly what you see. So this pattern is massive. Also, you can argue a little bit of an inverted head and shoulders here, depending on how you want to view things. Long story short, you had this little bit of a trend line here. You had the 618 here of this move, high to low, and you're above all of it. So at this point, I am personally looking for VIX to go higher here. And I'm looking for VIX to print between 45 to 60 on VIX. There's a lot of confluence here at 60, and then the upper range was previously 45. So this pattern is rather large, and it should last for 8 to 10 bars. So considering that it's a weekly chart, 8 to 10 weeks pretty much takes you to 2021. So definitely something you should be aware of. This is definitely a large market personality change, and the way to approach it is just to be faster, right? So when you have a VIX like this, it means that you have to take trades faster. If you have profits, take it off faster. If you have anything kind of that you're looking to swing trade, maybe do it a little bit faster, right? So instead of working on daily charts, maybe drop down and work on an hourly or 30-minute chart and trade it that way, because basically it's telling you that volatility is increasing, and when volatility increases, holding a swing trade becomes a lot more difficult because the trend is not defined. So that's the first thing I wanted to show you here. Now, one thing I do want to point out is, yes, the VIX did have a huge pop this week, 25 to 40. But nothing goes up in a straight line either, right? So if you like the idea, maybe see if you can get a little bit of a pullback, anywhere back to about 30 is pretty solid. In the event, and I don't see this happening, you get 29.5, that's a huge buy, but definitely somewhere in the neighborhood of 33. I still like VIX to the long side. If you like VIX, also by proxy, you're also implicitly short the market. Now, the other thing I want to talk to you about is the weekly support levels, right? So you'll hear a lot of talk about daily support levels. And the way that we traded it simpler is we like to buy the 8 and the 21 because those are the trending moving averages for the daily. However, if we like to buy the 8 and the 21 on a daily time frame because it indicates trend, what happens if the daily 21 is broken? Well, we pause, right? You can maybe think about shorting if you wish, but for most people, the best course of action is just to take a pause, go to cash in that position, and just kind of watch and see if it can recover the 21. So let's see where we are here. This is SPY, and frankly, we don't even need these other two guys. So let's just look at the daily and the weekly. You see the daily over here, you have this lower high, and then you have this low here. Okay. Now, where's your 8, 21, and 50? Notice how they're all well above price, right around 335 to about 339 or so. So very much elevated above price. This is not a bullish structure, guys. When you have the 8 crossing negatively through the 50, the 21, that's a bear structure. Also, you can see here that this has not really gotten back to the lows. Does it have to get back to the lows? No, but that is really where there is actual support. There's really not much between, let's call it 326 and 320. Lastly, the big point here on the weekly time frame, we like to buy the 8 and 21 on the daily. The same principle applies to the weekly. So you can see back here, we have the crash, we make a low, we storm back to the 8, and then just look at this 8 action here. Okay, there was a little hiccup here, but notice how cleanly and strongly it bounced off the 21. Why did it bounce so cleanly and strongly? Because it was the first test of the 21 in an uptrend. So you bounce there, you go back to the 8, and now what do you have? Well, you broke the 8 again. Okay, no big deal if the 21 were holding, but let's zoom in, and you can see here that the 21 actually broke. Okay, so you have the weekly 21 here, right around 328. You have the weekly center Bollinger right here, and you have a closing print right there. So you closed below it, you did it on big volume. All your momentum indicators have crossed negatively from elevated levels, and your squeeze parameters are going back to the center. So this is the first weekly crack in the indexes since the March lows. You combine that with what you just saw in VIX, and it sets up a potential for a little bit of a rocky end to this year. So again, nothing moves in a straight line. And the third thing that we're going to talk about, and I'll do it briefly, is these signals are not oversold. So this low here, not oversold, not oversold, not oversold. You can see the difference what it looks like when it's actually oversold. Yellow's deep, red and yellow are at the base. Nice big negative histogram, and you don't have that yet. So the third and final point is nothing moves in a straight line. There is a potential that you can bounce into next week. I personally think it's somewhat limited, but the potential is there because you are oversold on the intraday, but you're not oversold on the daily. So to put a point on it, to button up the conversation, be careful out there next week. If you don't have clarity in the markets, trade smaller and trade smart, and understand these signals are big and they last until the end of the year. If you want to trade to the long side, make sure that the index that you're trading is above its weekly 21. If it's below its weekly 21, move on to something else. I think that's the best advice that we can give you going into this volatile week coming up, and we'll see how it all goes by next week. All right, guys, thanks for hanging out, and we'll see you in the session. Cheers.